I'm genuinely buzzing, and this is pretty unbelievable to me anyway, but after 9 years of investing, my investment portfolio has just crossed £200,000. I've got my laptop here. I've crunched all the numbers in terms of how long it's taken me, what my gains have been, how much I've contributed. We're gonna go through all of that transparently in this portfolio update. To be honest with you, let's just get straight into it. I'm pretty excited. This on screen is my investment portfolio spreadsheet, which we will come back to. And if you do want to get this, I'll link that in the description down below. I'll also link my free guide, cheat sheet, and 30-day course if you need a hand getting started with investing. But if I come across to this contribution/gains tab, I've documented all the important numbers, which I'll go through with you now. And then we'll go into the more granular level of the accounts that I use and the actual investments that I have and have helped me get to this milestone, which I'm buzzing about. And I'm recording this on a Friday, so there's definitely a few pints of Guinness on the cards tonight to celebrate. So at the top here, you can see my investment value, the market value of all of my investments is just over £200,000, and my actual contributions are just over £127,000. So my gain is £76,000, or just under 60%, and I started back in August 2017. Now with my own contributions, as we'll come down to in a second, a lot of that is really weighted towards more recent years, because when I first started, I was working on the grad scheme, my salary was lower, and then as I got progressed through my chartered accountancy career to becoming a manager, my salary was much higher. So most of those contributions have already been weighted more from sort of 2022-3 onwards. And speaking of those contributions, you can see in this next table here, I like to break it up by my money I've contributed out of my pocket and then also free money. And the bottom line here is you can see that free money chunk, which is mainly employer matched pension contributions. I used to get a 6% match in London when I worked there, and I got a 12% super contribution, so essentially the exact same actually, when I was working in Australia as a chartered accountant. But roughly 30% of my total investment cost basis or contributions, whatever you want to call it, has come from that free money aspect, which is why if you have a pension, definitely make sure you're taking full use of the match. But also if you have a workplace pension or even multiple, that is your money, it's being invested, so make sure you get access to it and take control of it. And a few little tweaks actually in all three of the workplace pensions that I've had have genuinely put multiple 5 figures into my pocket and have helped me get to this 200K milestone much quicker. I actually will show you all of those contributions that I've made so far in a second as well. But of that £89,000 of my money, most of that has come from my own pocket. So essentially money I've earned through my 9-to-5 job and invested, and some of it as well has also come from my limited company, which is Making Money Simple, which has been a limited company since the end of 2020, and most of that amount there is essentially SIP contributions that I've made over that time period. I used to also pay myself dividends before I was working for myself full-time, and the dividend allowance was 5K and then it got cut to 2K. I would pay myself dividends and then essentially put most of that in my stocks and shares ISA, but most of that money is SIP contributions that I've moved from my limited company bank account into my Vanguard SIP. The biggest thing I wanted to show though, and I can confirm that the first 100K is the hardest, as these numbers show, that it took me essentially 78 months, to get to my first 100K. And that was between August 2017, when I first started investing, and February 2024. Of that as well, you can see around 25% of it was gains, whereas 75% of it was my own contribution. So I had to do the heavy lifting. However, the second 100K only took me 29 months, less than half the time, which is crazy to think about. And the actual gains I've had over that time period have nearly matched how much I've contributed, which really is quite mad to think about. The one massive caveat here is, I'm gonna be honest, and I've been lucky with the market returns over the last 9 years of investing. We've essentially been on, I mean, there's still been dips and a couple of crashes, but we've really been on a generational and quite wild bull run where loads of stocks and the global stock market, particularly what I invest into, just keeps going up. So I definitely have got lucky maybe with the timing, but it's one of those things where you've got to be in it to win it, and it's never too late to start. So even if you haven't started, just get started, invest what you can and be consistent. But yeah, the gains particularly really over the last few years, as you can see here, have massively helped to grow my portfolio to this level. One interesting thing actually, and I mentioned this in previous videos, is that when there is the next big crash, it'll be interesting to see how I react. I'm 99.9% sure I won't panic sell, but realistically, and I'll scroll down here now, you can see 92% of my money is in global funds. I've got no bonds, no commodities, no precious metals like gold. So if there was a big crash, I could potentially lose 30 to 40%. And I mean, let's just say 40% here, a bit of quick maths. I might see my investment portfolio drop by, that number hasn't worked. I might see my investment portfolio drop by potentially £75,000, which would obviously be gut wrenching, but unfortunately part of investing is being able to sort of know those drops are coming and not panic sell. And I will be investing for multiple more decades, which is why I'm still essentially staying in 100% global index funds. But the reality is I probably, unfortunately, will experience multiple 30, 40% drops, maybe even more, which is just part of investing and growing your wealth. Which is also why workplace pensions are so good, particularly if you optimize them, because that money is going to be locked up for decades potentially, and there's a much lower chance you'll panic sell compared to your stocks and shares ISA. Saying that, I think a split approach of both of those accounts is best for most people, and that's what I do myself. But as it says here, I am a global index fund investor, and although I know my approach is a bit complicated, I do have quite a lot of accounts from being in the UK to moving to Australia to now being back in the UK, and the broker landscape in the UK has changed a lot from 2017 to now nearly 10 years later in 2026. But most of my money ultimately is in various low-cost global index funds and ETFs, and I've got some other higher risk / fun investments down here which make up around 9% of my portfolio. In terms of my largest accounts, this is my Vanguard Stocks and Shares ISA. I've had this since 2018. It's my largest individual account, and this is all in the FTSE Global All Cap, the most diversified global index fund for us as UK investors. Even though it's slightly higher fee with a 0.23% fee, it's got over 7,000 stocks. My Vanguard SIPP is then my second largest investment account. This one is still active. I still contribute to it monthly. Unlike my Vanguard Stocks and Shares ISA, I'm not moving that money. But I now use my Trading 212 Stocks and Shares ISA for my monthly contributions. But my Vanguard SIPP is my second largest account. This includes 2 old workplace pensions that I consolidated in and further limited company contributions that I've added myself. And now that I've been working for myself full time for 2026, I'm essentially funding my own pension by moving money from my limited company to my SIPP. Once again, so probably no surprise if you've been a long-term follower of the channel. If you're not though, thanks for clicking on the video, and make sure you do subscribe so you don't miss future investing content. I do try and post weekly videos, 1 or 2 a week on here, and it's always or normally about investing. But that again is all in the FTSE Global All Cap, to no surprise. I then have my Vanguard Australia account, and I'm actually in the process of bed and ISA-ing this money, which I'll be releasing a full video on soon, including the maths and the tax that's due and the chat I had with my accountant. But at its peak, my Vanguard Australia account had around $100,000 in. I sold half of my GIA money to get that back to the UK and get it inside an ISA. Coming back to the spreadsheet, as you can see here, I then do have various other accounts which are still decently sized but smaller in value compared to those 3. But yeah, the main thing to point out here really is most of my money is in global funds, so I do like to think that I practice what I preach, and I'll continue doing that going forward. So actually then scroll up from this and show you my actual contributions for the year. So it was a little bit messy this year particularly, because I started the year in Australia, I then moved back to the UK, so I started using my ISA and my SIPP more. But overall, we're now, I've made my August contribution, so we're technically 8 months into the year for me, and I've contributed nearly £9,000. Essentially half of that has gone into my SIPP, some has gone into my Stocks and Shares ISA, which I've now started using. I continue to put a little bit of money into crypto every single month, mainly Bitcoin, which makes up around 8% of my portfolio. And then the rest of it was in GIAs when I was in Australia. But now I'm really planning on maximizing my ISA allowance that I'm back home. I like to track this, and I do think if you're looking to track things relating to your investment portfolio, tracking your contributions per account is a good thing to do. And it also means when you hit milestones, you then know exactly how much contributions you've made compared to your gains, which can be quite motivating to keep you on track. But I also track at the end of each month, essentially how my investment portfolio is performing. And as you can see, the main thing that sort of stands out here, in March, there was a big dip when the war started, and I lost nearly £10,000, or actually just over £10,000 on paper. But now, fast forward, 5 or 6 months, I'm now £16,000 up for the year, which is crazy to think about. And you really just can see here in this individual column here how some months I'm down thousands of pounds, some months I'm up thousands of pounds, and that unfortunately again is just the nature of investing. The most important thing is trying not to get too sucked in to those daily and monthly fluctuations. Just keep investing consistently, stick with it, and don't panic sell. The last table I'll show you is this, and you can really see how over the years my contributions have steadily increased, particularly when I qualified as a chartered accountant in 2022 and I got a big pay rise. I then have been consistently able to invest more. To be transparent, 2026, because I'm now working full-time, self-employed for myself, will probably be my lowest year of investment contributions since 2020, and that's honestly completely fine. I sometimes get messages from people who may be a bit stressed that they can't invest as much this month or this year, and if you can't, honestly, don't worry. I know sometimes life will get in the way. For me personally, I still have no mortgage, no kids, no car. I've never had any of those to my knowledge. So my biggest expenses are definitely going to come in my 30s. And it wouldn't surprise me as this table goes on if some of these numbers are tiny compared to what I've invested in years gone by where I've had much lower overheads. So all I really say to people is don't get too stressed on how much you can or can't invest. In a perfect world, of course, it'd be great to invest a bit more and more every single year, but I know life gets in the way. So I just say to people, put aside what you can and invest for the long term. And if there are some months or years where it's down, if you're still doing what you can, then don't worry too much about it and don't be too hard on yourself. But the other side of the coin on that one for me is now that whilst my overheads are lower, I'm really trying to aggressively invest to build up this pot or these pots as big as possible. So when the money flowing into my investments takes a back seat, most likely throughout a large chunk of my 30s potentially, at least I've got a good foundation there that will continue to compound in the background. I've also got this table down here, which you've probably been looking at. So pre-2019, I've sort of estimated these numbers. I didn't track things as religiously, but since 2020, I've tracked all of these things very religiously. And if you watched previous videos, you probably already know that. This cumulative gain column, by the way, is wrong. So I think just ignore that. But once again, and just to show it, you can see that with the gains in each individual year, I have genuinely been very unlucky. I'm very lucky. Sorry, very lucky. You can see 2024 was a massive year. 2022 is really the only year where I've lost money on paper. Of course, even if I was down, I would never panic sell. It's only a paper loss until you sell and lock it in. But it will be interesting because we probably are overdue a big crash. It's impossible to time. I'm still investing monthly. I'm not changing anything. But I imagine at some point, or definitely at some point, because the market does always crash and it's a matter of when, not if, there will be a big negative in that gains column. I could potentially lose multiple, or almost certainly will lose multiple 5 figures when and if that does happen. So I'll need to be able to deal with it and stick to the investment plan. And yeah, when that does happen, I will be making videos because I do think that panic selling is one of the biggest risks with investing. But knowing a crash will come at some point will hopefully settle the nerves when it does come. And the way I like to think about it is even when there are dips, this year with the war, last year with the tariffs, I can buy the exact same global index funds or more units of the same global index fund at a lower price. Anyway, I'll leave that video there. I wasn't actually planning on doing an investment portfolio update, but I hit this milestone, which honestly with you, I'm genuinely chuffed at. And I think, yeah, it just really does show that the first 100K takes a while to get to. And if it takes you longer than that, it doesn't matter. Everyone's journey is different. But that second 100K really does come around quicker, or it certainly has for me anyway. So hopefully there'll be another column here soon with 300K, and that'll be halved again. I'm not holding my breath, but of course, when that does happen, I'll be making another video as well. So make sure you subscribe so you see all my future investing videos. And as I said, I do try and post 1 or 2 investing related videos on here per week. Thanks for watching. Have a good rest of your day. I'll link those things down below in the description that I mentioned at the start of the video. If you've got any questions, let me know. I'm happy to help. And if not, I'll see you in the next investing video.